Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all of you had a very nice day of trading today. And in today's markets, guys, well, as a matter of fact, it was a quite boring day. The SPY, the QQQ were up nicely today, and largely most of that was due to some of the big tech outperformance, namely in the names of Microsoft and NVIDIA. Amazon having a fairly decent day too. But we did see a little bit of give back in terms of the market breadth expansion that we've been noticing in the past week of trade, as some of our minor sectors got a little bit tired after rallying for the last 5-6 days and taking a little bit of a breather. But all in all, I wouldn't say there's any red flags today, just a very normal day of price action. No macroeconomic news, no more news on the political front either, just a very normal and casual day, which is a nice change for once, especially in light of the last 3-4 weeks of high volatility. However, guys, that is not going to last forever. The volatility will resume, and we do have a number of volatility catalysts on the horizon, especially in the next 1 week of trade. So in today's video, we're going to take a look at a few things together. Number one, we're going to be going over the technical analysis of the major market indexes right here. Thereafter, we're going to be taking a look at our major big tech names, see after today's very nice day of performance, where do they stand leading into each of their respective earnings coming into the next 2 weeks worth of time. And then lastly, take a brief look at my portfolio for a few trades made today and which trades I am keeping into the rest of the week. So it should be a shorter video than usual, guys. No earnings, no big macroeconomic events, no nothing truly. Just normal price action and technical analysis. So let's jump right into the action, shall we? So the SPY up about 0.56%, the Q's up about 1.3%, but you'll see when I pull up the heat map, very top heavy market. We haven't had one of these days for approximately the last week and a half, so I wouldn't say that this is a major screaming red flag, just some big tech outperformance. Microsoft, the big winner of the day, NVIDIA, a big winner of the day as well. All across the board, tech was doing fine, whether it was the software companies or the hardware and services companies alike, all of them doing pretty good. Tesla pulling back about 2.1, but the bottom half of the market, guys, just not cooperating today. Very mixed market across the bottom half because we did have a slight little uptick in yields. And we were saying that although yields are coming down, it is going to be a very bumpy path towards the downside. And any little pops in the yields will, of course, be affecting the bottom half of the market, which is known as the yield sensitive sectors. Thereafter, guys, taking a look at the 1-day relative, you'll see that technology, communication services were your outperformers. Communication services, of course, led always by Google and Meta, so no secret there. And to the downside, you had pretty much the rest of the entire market, right? But all in all, over the last 1 week, this 1 day of pullback on the bottom half is not impacting the last 1 week of performance. Everything's still pretty much in the green, which is why I say no red flags, just some very healthy market rotation overall. So in terms of the next thing we're going to look at, guys, is the seasonality, right? The seasonality, we know that January is going to be a fairly bumpy month. Next week, we had a few big key indicators at the same time. Next week, we get Jerome Powell on the Wednesday session delivering us a potential Federal Reserve pause. Thereafter, we also have a slew of big tech earnings. Pretty much every single one of the big tech names in the Mag 7, other than Netflix possibly, and other than Google, are reporting next week, and so many other big companies in between, such as Visa and MasterCard as well. So next week, the volatility will resume with some of the big tech heavy names in terms of earnings. So myself today in the portfolio, I took a little bit of profits, freed up even more buying power, getting ready and very excited for those big tech earnings. So January, fairly bumpy month. February as well, can see a slight little uptick in terms of seasonality, but overall is a very volatile month. The actual sustained rallies usually don't start until the end of the portion of March and then last pretty much all the way into the spring. So all in all, looking pretty on par with seasonality. Very volatile initial start to the month of January, which is to be expected. Moving on to the fear and greed index. Well, you can see we are still in fear, but more in line towards the neutral point. We've come up a large amount in terms of the fear and greed index. Just 1 week ago, we were sitting at about 31 read, and 1 month ago, when Jerome Powell crushed the markets, we were all the way down to 28. So we are coming back in a decent way, but still overall in a bit of a fearful and timid environment for the markets. Market momentum has now shifted to neutral, the first neutral read since pretty much the last 1 month of time. We were either always in fear or extreme fear, so nice to see a little bit of an uptick there. Stock price strength, net new 52-week highs and lows. Well, for sure, after a day like today, guys, where the bottom half of the market is more down than up. We had a lot more names that were red on the SPY today, but just because of the weight of big tech, we were actually green. That is still in an extreme read fear, still at the lows of what we've seen over the last 1 year of trade, but all in all, curling up from the lows, which is exactly what we want to see. Stock price breadth is still somewhat very low and in extreme fear reads. We'll take a look at that in just a few short moments when we do the TA on the SPY, and when I take you through the percentage of stocks above their 20, 50, and 200-day moving average respectively. All in all though, guys, the fear gauge is slowly curling to neutral, but after 5-6 days of very nice rallies and some short-term overbought conditions, could we maybe be seeing a top forming right now and possibly looking to regain some strength before putting in a new leg? Quite possibly, guys, and it would line up with the next few days of data that we're going to receive. The bulls might be getting a little bit tired after this beautiful 6 days in a row's worth of rally. In terms of earnings, well, we did have earnings today from a few companies, guys, but nothing crazy enough for me to report. However, we got earnings from Johnson & Johnson and Procter & Gamble, two of the very largest consumer defensive names, and do give us an indication into the health of the consumer. I'm happy to report that both earnings went very well. Johnson & Johnson reporting very good consumer durable segments, but having a little bit of problem with their med tech segments as well. But the consumer side of things was very good indeed, and Procter & Gamble was very good across the board. I have some little headlines here. We're only going to spend 30 seconds on this, but P&G gains as solid consumer staples demand drives earnings beat. So organic sales across each of their beauty, grooming, healthcare, fabric, and home and care and baby, feminine, family care divisions grew, and our first half results keep us on track to deliver within our guidance ranges on all key financial metrics for the fiscal year. So not embarking on any massive layoffs, not saying the consumer is weak, not giving timid guidance, and definitely not reducing any profit or revenue expansion metrics. So all across the board, it does show that the consumer is healthy, is still spending as much as to be able for this company to be able to increase its guidance, maintain guidance on par for another slew of metrics. And that's pretty much it for Procter & Gamble. Both of those companies were not doing too bad today. P&G was actually up about 2%, which is standard for them after earnings, but at least it wasn't a complete disaster, and gave us some very nice insights into the health of the consumer, especially for consumer defensives. And Johnson & Johnson, was down, but ended the day with a nice little green push. The reason that they were down is because Johnson & Johnson does many different things. You may know them for shampoo, baby products, and stuff like that, but they have a whole medical, device business, right? So I was looking for the word, but it was right there. A whole medical device basis, and that division was not doing so hot at all. So that is why they were largely down today. But in terms of their consumer defensive segment, that was actually doing quite well. So those are some earnings that we had for today. But other than that, guys, the biggest ones, in my opinion, will probably be tomorrow after the close. Texas Instruments giving us some insight into the direction of the semiconductor trade. And also on the Friday session, guys, we get a big one, which is going to be American Express. Probably these two ones are going to be the biggest ones to watch over the next 2 days, but it is really nothing in comparison with the week that we have next week. All of big tech earnings, and I will show you that earnings calendar on the Friday session, but let's get through this week first, right? So moving into our technical analysis portion of the video, now that we're through that, in terms of the SPY, guys, in terms of the technicals are looking very good, but as I said, we have bounced now for about 6 days in a row. The context, yes, was a daily downtrend. We have now engulfed 100% of the move, and we're now above the previous area that was a bit challenging for the bulls since Powell, right? And that is, of course, 602 down to about 595. That being said, if we do have a little bit of a retracement, just looking for a higher low, so much space, right? Anything above 575, looking for a higher low for possible further trend continuation. So I really would not be surprised if we are due for maybe 1 or 2 days worth of pullback coming into this prior resistance, which is now support, and possibly coming in to tap into those moving averages as well. This would look like a very, very logical move if the bulls were to gather some momentum down there before mounting an additional rally. If you want to know when the rally is finished, guys, just take a quick look at the 1 hour time frame and the loss of the 12 EMA. If we get a breakdown, lower low, lower high, and lower low again, that would be a loss of the hourly time frame, loss of the hourly trend, and also a loss of the 12 EMA, which is your short-term momentum guide. If that happens at the same time over the course of the night or tomorrow morning, we were going for daily consolidation, and all things considered, most sectors have a lot of space under them, so it would just be some very healthy consolidation in my opinion. As of right now, no red flags. The weekly is looking fantastic. Beautiful weekly engulfing move by the bulls. So any reset to the downside, guys, probably just going to be due for a little bit of continuation, even on the weekly timeframes as well. But maybe we might be getting some muted price action on the SPY and the QQQ because we have all the big tech earnings next week, and they will arguably move the market a whole lot more than the earnings that we have ahead of us, or even the economic releases that we have ahead of us, the only one of which is the S&P Global Services PMI on the Friday session. We also get the manufacturing report too, so we'll see how those go. But other than that, guys, it's really going to be a question about big tech for the next one and a half weeks worth of time, roughly. And then we move through the rest of the earnings season. That's pretty much it for the volatility catalyst. Big tech earnings, Jerome Powell, and that's it. We started off the month of January. We had a ton of things on the horizon, guys. We had the CPI, we had both jobs reports, we had the Trump inauguration, and many more things in between, such as bank earnings. And we've gone through them pretty much unscathed. The market has reacted very nice to each and every one of those reports. The reports showed that in terms of jobs, the economy was still healthy. In terms of economic output, the economy was also still healthy. In terms of inflation, well, we did get a slight little uptick in inflation, but it was not as bad as most people were anticipating. And also in terms of bank earnings, they were fantastic, showed the banks were well capitalized and that the consumers as well had money to spend and were not over leveraged on any form of debt. So all in all, it's been a volatile month of January, but I would not say it was a bad month of January. We really got all the positive data points that we were looking for. So no major red flags. Happy to say we are almost through the volatility, just about a week and a half to go. Moving on to the Qs right now. So, actually, before we do that, guys, in terms of momentum, right? So taking a look at the percentage of stocks above their 20-day moving average, we're still chilling at about 63, massive bounce off the lows in the last 6 days, guys. We're now back within our historical averages, right? Usually we stand between about 60 and 70 at the top end of the market. So in the event the markets do pull back, we will kind of normalize, but I wouldn't say we're in red flag territory, similar to where we were just a few short weeks ago when we were really at some of the fear low reads that you get from now and then. In terms of the percentage of stocks above their 50-day moving average, shows your longer term recovery in some of the stocks that were unfavored in the last 1 month of trade. Well, we are now off the bottom, sitting at a cool 45. Now, 45 is literally the midpoint pretty much between the overhead resistance, which when we get overheated in the market, this is when you know you might be due for some sort of extended sell-off. And when you're down here, you probably understand that, well, in relation to history, it's probably a good time to buy because you're most likely hitting some oversold conditions and the market might be due for a bounce. Now we are kind of right in the middle. So if you just ride this uptrend slowly but surely and recover in terms of market breadth, that is probably going to be the expectation moving forward, unless we really get some bad economic data overall. Moving on to the percentage of stocks above their longer term 200-day moving average. This shows a longer trend of either declines or appreciations in the market. And we can see there's been a very nice bounce over the last 1 week of trade. Now, of course, today was a bit of a red day because most of the market was down. But all in all, guys, a very healthy bounce from the arguably historical lows where the market truly does most of the time find a local bottom, except for when things get really bad, such as the bear market of 22, such as COVID during 2020, and the interest rate temper tantrum of 2018. But in a normal market, usually we tend to bottom out in the low 40s, and that's kind of where the bulls found their bottom this time around. So all in all, not looking bad, not on the short-term momentum, not on the medium-term momentum, and nor on the longer-term momentum either. The market is recovering quite nicely right now. Moving on to the Qs. So in terms of the Qs, guys, 1.28% to the upside. And obviously a lot of the heavy lifting there was done by Microsoft and NVIDIA, some of the two biggest weights. And Microsoft and NVIDIA have been somewhat muted in the last roughly, well, Microsoft a lot longer than NVIDIA, but Microsoft and NVIDIA both. We'll take a look at them in a few short minutes when we take a look at the stock analysis, guys. But you have to understand, right? For all intents and purposes, they have not breached any new levels in terms of NVIDIA in the last 4 or 5 months, and in terms of Microsoft, arguably in terms of the last year of trade. So could they be looking for possible breakouts? Well, we'll see. Microsoft has earnings in the way, but definitely helped lift the QQQ in a big way today, 1.3% to the upside. Very healthy day overall, but the context, the daily downtrend, the big engulfing move, the bulls have now created a ton of space to potentially reverse this into a new daily uptrend, but consolidation could possibly be warranted after a very beautiful 6 days worth of rally. Just keep an eye, guys, on the 12 EMA and on your hourly time frame as well. In the event you start losing this into tomorrow morning, that'll be hourly downtrend. That will be loss of the short-term moving averages and could be synonymous with a potential just consolidation phase on the Qs, which might bring us down all the way down here. About 520 would not be so odd, to say the least, right? 515 down to about 510 is your next support, and the moving averages really start around that 520 mark. So anywhere between 520 and 515 could be a notable pullback zone for the Qs before maybe embarking on a little bit of a rally leading into those big tech earnings. Nice to see that before big tech earnings, though, we have a lot of cushion, guys, a ton of cushion, as a matter of fact. Anything above 500, looking for a higher low for possible further trend continuation. And we did close a very nice weekly engulfing candle last week, looking to push a little bit higher. We will see how we close, but for all intents and purposes, this is a very healthy bounce off the lows, roughly almost 7%, so creating a lot of space, and now we have a lot of cushion for those big tech earnings. Moving on to XLF right now, so financials has been excessively strong ever since their earnings cycle started, but now we might be getting a little bit toppy on this chart. Keeping in mind, guys, the hourly time frame, I always tell you guys, when you want to know that a daily move is done, just take a look at the hourly time frame and you might find your local top. That being said, if we take a look at financials right here, financials possibly going for the hourly downtrend shift and the loss of the 12 EMA that they've maintained the entire time since their bank earnings rally. If that is the case, we will be looking for a daily higher low. We have tons of space, guys. The context, of course, was the daily downtrend, big engulfing move. Now we look for the higher low to possibly reset the daily uptrend. Not looking too bad and tons of space. Anything above 47, looking for the higher low, and probably the extent of where we can come down into the moving averages and into prior resistance, which is now support, and that is sitting roughly 49 to 48. So in terms of the markets, guys, if we see some further declines tomorrow and into the Friday session as well, essentially what I'm saying is there probably not is any reason to panic. The SPY has tons of space to set up the higher lows. The Qs have tons of space to set up the higher lows. And even one of the more bullish industries as of lately, financials, also has a ton of space. These are some of your three, well, the QQQs, the XLF, and the XLV are three very major components of the SPY, and so far they are not looking too bad. And the last one here is XLV, also not looking too bad with those earnings from Johnson & Johnson. Johnson & Johnson actually represents a decent weight within this, within the XLV ETF as a whole. So it's nice to see that their earnings, even though they did drop a little bit, it was not a complete disaster. So the XLV ETF really just maintained its own right there. In terms of this, we are now in a very healthy daily uptrend. Anything at this point above, let's call it 139, looking for a daily higher low for possible further trend continuation. It's just not been moving very fast, has it? Elevator down and the stairs up, as they say, I guess. In terms of where we stand though, guys, coming out of support area, which is 140 down to about 128, not looking too bad. We're using all of this previous congestion area as support for the bulls. So even though we are in the context of this big weekly downtrend, the bounce size is now getting quite adequate. I'm not giving it to the bulls just yet in terms of a guarantee that they'll be able to reset the weekly uptrend, but it's not looking too bad. We have now crossed the 50% fib retracement line, and if we can head up to the 618 143 or the 782 145, it would really give the bulls the best possible chance at resetting the daily uptrend. But we know that the bounces are not the end-all be-all. As a matter of fact, we had a very healthy bounce here, and it just got rolled over anyways. So this is a very nice first stage in the reset process, but could take a little bit of time to come alive. One of my favorite trades right now, I've mentioned them in the past, but I mean, Johnson & Johnson, decent level, all things considered, for some call debit spreads, not gonna lie. Very decent level. It's just that Johnson & Johnson moves slow, but the trade is as follows. The long is pretty much here. The stop goes below the 139 level, because then you really forfeit a massive level of prior support and the recent price action. And the upside appreciation target has to be a resistance line around 159. So a decent little trade in terms of risk reward. It's not a fast moving company. It's not a sexy company, but the setup is not too bad, if I do say so myself. Just about a 2-to-1 risk to reward. But if you guys want the juicy stuff, we have to look at ARKG. I think that this is one of the most underappreciated stocks, or rather underappreciated sectors in the entire market. If the narrative is AI, well, definitely that narrative of AI has not carried so much into the medical space. ARKG is the genomics ETF, also known as a lot of different companies that are trying to do wonders with gene editing, DNA sequencing, to try and cure some long-lasting problems that humans have been having as a society. Think of cancer, think of Alzheimer, think of many different things that require a ton of compute power in terms of being able to derive possible outcomes for certain treatments and their impacts on your DNA and your impacts on the human body overall, right? It takes a lot of of time for average individual programmers to derive these algorithms to be able to make these forecasts and run these models. That is where AI come in. And AI has been front and center for the genomics, quote unquote, revolution, as Kathy Wood calls it herself, but so far I do not really hear anybody talking about it. Now, of course, this sector is going to take a while to really come alive with those breakthroughs, but it has not been appreciated at all as of late. However, I do think it is a very nice asymmetric trade. An asymmetric trade is when nobody is looking at something and the price is super cheap, you can go in with a decent little amount of size, put a lot of time, let's say, on call options, think of June 2026 or a January 2027, and you just wait for the narrative to potentially come into play, because we know AI has hit pretty much every segment of the market, from the banking sector to a lot of the tech sector as well, but it has not really hit the healthcare sector that much. So this one could be a very, very interesting trade for an asymmetric bet. The risk is relatively small, the volatility is recently low, and the upside potential for appreciation, at least over the next 2 years, as we move further and further down into the AI narrative, could be a very, very interesting play, at least until, maybe $35, $40, which is not all that far from the peaks reached just about a year and a half ago. So that is my possible favorite trade in the entire healthcare sector. It is more biotech and genomics, but it is still a play in the healthcare sector nevertheless. The next one we're going to take a look at is SMH, of course, for the semiconductors continuation, and this one is looking good. Finally, guys. This is the first time since the month of July that we've cracked above the 260. Now, the week is not finished. They could always pull back below, but nice to see them really starting to manifest that semiconductor rally that everybody has been waiting for very patiently. That being said, daily uptrend, because we never really flushed the lows or closed below it, so this is still, technically speaking, although they almost lost it, one big, massive daily uptrend. That being said, anything pretty much above 240.71, looking for a daily higher low for further trend continuation. And what's nice is now that we're above this whole area of resistance, we closed a big candle above it, we can now pull back into it and use it as resistance. What you are seeing right now is a possible very beautiful setup for a breakout, retest, and possibly rally. So the bull's looking quite good there, if I do say so myself. In terms of the weekly, well, I promised you guys, I will not close this weekly box green until we close a weekly candle above. It looks like it does want to happen this week, but the week is not over. Still a lot of trade to be had. Weekly uptrend is very nice, leading into the breakout of the resistance range. And the next target, of course, has to be the all-time highs at around 276. Looking very good, but we have to get the weekly close above here, because if we just give back all the gains today and tomorrow and Friday, well, unfortunately, this candle is going to be a massive doji wick like this, and we're just going to have a body within the range, and that is not going to be sufficient enough for me to say that the bulls have really conquered and mounted above this resistance range. But all in all, not looking too bad right now. Could be quite juicy, guys, for those semiconductor plays that have been all out of favor recently. I've been building positions in them for the last 30 to 60 days. So I'm just saying the train just might be leaving a little bit sooner than some people are anticipating, which does go in line with the company's guidance that they've been giving over the last 30 to 60 days. All those earnings reports, guys, think of TSM, think of Micron. They've all been saying 2025 is going to be a very good year for them. So possibly now is the start to that very good year's worth of rally. Now, moving on to the Russell. So the Russell down about 0.65% today. Not the worst day for the Russell, but not the best day as well. This is really just a question of the some components of the SPY pulling back. We know the Russell is very heavy in financials, in healthcare, and in industrials too. But however, guys, those are the sectors that were kind of down today. So normal that the Russell is down too. That being said, the Russell is working with a lot of space right now, but we are into resistance, right? 231 down to about 225. That is the resistance range. You have to go all the way back to 2021 to find those local all-time highs. That is what's really been plaguing the bulls as of recently, and getting a little bit tired after this beautiful 6 days worth of rally. So if we do have to pull back, we have a lot of space. Anything above 214, looking for a daily higher low for possible a second attempt at breaking through this resistance. All in all, though, not looking too bad. Even on the weekly, guys, beautiful weekly engulfing candle last week. So if the bulls have to take a little bit of a breather and consolidate a little bit more, and we go looking for a weekly higher low, there is still tons of space for the bulls. But all in all, we are still kind of trapped between overhead resistance and below support. And now lastly, the Dow Jones. The Dow Jones actually doing quite well today. Continuation of the rally, largely helped by one of the biggest names in there, which was Microsoft. NVIDIA is also in the Dow Jones now. So that being said, guys, Context was a daily downtrend, huge engulfing move, and now tons of space, anything above 41.8, looking for a daily higher low for possible further trend continuation. So pay attention to the hourly time frame. I always tell you guys, how do you know when a daily rally like this is finished? Just look at the hourly time frame. If you lose the sequence of higher highs and higher lows, and you go into an hourly downtrend and lose the short-term guide, which is the 12 EMA, which they have not lost since the rally, mind you. If you see that, you probably know you're in for at least maybe 1 to 3 days worth of daily consolidation, which possibly could bring us all the way back down there, right towards the moving averages around 43,000. That would not be surprising. It would look very logical for a pullback into possible trend expansion coming into next week with those big tech names. So all in all, the Dow Jones is not looking too bad, even on the weekly, guys. The weekly downtrend, yes, but now immediately engulfed into a very weekly bullish rally. So any extended consolidation in the event we cannot get this daily uptrend done and we go into more extended consolidation, that's always a possibility, you'd be looking for a weekly higher low to reset the weekly uptrend. So pretty much all roads point to the fact that the bulls are looking healthy right now. A lot of space off the lows. We are through most of the volatility catalyst events. What really could throw maybe a wrench in the mix is going to be whatever Jerome Powell says over the course of next Wednesday, and also the guidance from Big Tech 2. Those are going to be the biggest market moving events, at least over the next 1 week of trade. Taking a look at yields, well, yields are just kind of chilling. They're just not really doing anything, guys. After the big engulfing move to the downside after CPI, we're kind of just hesitating around the highs. And I was saying, I would not be surprised after such a big move down, you can have a little bit of a dead cat bounce potentially. And then maybe you're looking for the rollover, provided we don't get any negative data in terms of inflation, negative data in terms of rates being too high for too long type of thing, or anything of that nature. But all in all, yields are not looking too bad. Just looking for the lower high, possibly looking for a lower low. That would be the first daily downtrend since pretty much the early portion of December. So we're going to take a quick look as if we can get that. In terms of the weekly though, the weekly is still a very massive weekly uptrend. So you need to be a little bit patient to wait for this one to roll over and give you the confirmation that you've been looking for. And that applies to really the 10 and the 20-year yields. They almost look identical right now, which could mean that this is my entry point for the bonds. I've been saying it, right? The TLT is just the inverse of the 20-year yield chart, essentially. And we do have a nice engulfing move, possibly looking for the lower, higher low, and then going for maybe a daily uptrend shift. So I possibly will be looking to bid on this dip here using TMF as my intermediary, the 3 times leverage version of the TLTs. And if I do play this one, guys, which I probably will, I'll be putting a ton of time on these contracts. Think maybe January or even June of 2026. The yields move very slow. We know they will be affected by policy. We know that the road could be a little bit bumpy because yields will be higher for longer, but may just be due for a little short-term momentum rally. So I'm looking to play this one, but you got to put a lot of time on the contracts, guys. It doesn't move like Palantir, right? Now moving on to crypto. Well, crypto is slightly down today, but I wouldn't say there's any major red flags or any levels that were big, that were broken in a big way, right? Daily is sitting in a nice daily uptrend, looking for a higher low. Anything above 99,300 is looking for that daily higher low for a little bit of trend continuation, possibly looking for the absolute moonshot for Bitcoin. Are we going to get it, or will we just get relegated back into the range of the gulag that we've been in for the last 3 months? Well, we'll have a look at that, guys, but all in all, it's not looking too bad overall. Daily uptrend is still nice. Although we have pulled back, we are above the current area of previous resistance, which should now be acting as support, and that is 101 down to roughly 97.5. In terms of the weekly as well, Bitcoin is really not looking too bad at all, guys, right? Still in the context of trying to go for the weekly expansion trade. And even if we don't get it and we just devolve into some form of a tightening range, I would not say there's any red flags on this chart much before, unless we break the 89K to the downside. Then you have to look out below. But as of right now, all I see is some very healthy consolidation and an all-time high breakout attempt for Bitcoin. If they can't get it done, well, they'll just have to gather some strength back in these levels and make an attempt at a later date. But all in all, it's really not looking too bad for Bitcoin and the rest of altcoins, guys. Well, just understand, if Bitcoin is not pushing, the altcoins are probably not going to be pushing as well. I keep telling you guys, just keep an eye on the Bitcoin dominance chart. If you do not see some very abrupt moves to the downside, you cannot say that the altcoins are manifesting a lot of strength and going for the altcoin rally. So I still want to participate in a lot of the altcoins. However, guys, we need to taper back our expectations and we need to really start bidding these slowly, not quickly, right? Because we know it takes some time for them to move overall. Now moving into our big tech names. So big tech not looking too bad, 0.53 to the upside for Apple. Apple finally coming into a little bit of a bounce. Yesterday we were noting some confluence. Confluence, the 200-day EMA. Couple that as well with the last 3 months worth of support, a very big level. Couple that with daily oversold conditions, as you can see down there. And also couple that with a few things that Apple doesn't do that often, which is tag the 50 EMA on the weekly. Usually when it tags the 50 EMA on the weekly, it's a good opportunity to start buying. I'm not saying load up the absolute truck, but in the context of a bull market, this is the bear market, if you get a touch or a move towards the 50 EMA, it's usually not that bad of an opportunity to at least make some form of a bid for a potential bounce trade. So nice to see Apple bouncing off the lows today, but the job is not done, guys. They have a lot of work to do. So even though they did get the hourly uptrend, which is what I was telling you guys to monitor yesterday, even though they did get it, there's so much work to do for the bulls, right? This overhead box, let me just readjust it because now this is resistance. So unfortunately, we got to put that red. So in terms of the bounce, we're going to be watching for the bounce, but the context is very clear. Big daily downtrend and 1 day's worth of bounce is not enough. I'll remind you, we need to bounce high enough that the bulls create some space to be able to reset this into the daily uptrend. But in my opinion, they will not have the time to do that much before their earnings, which is next Thursday. So only about 5 trading days remain for Apple to be able to bounce and change the trend. I do not think that is going to be possible. The best thing you can expect from the bulls is have a nice enough bounce that they create a lot of space off the lows. That way, if earnings are not well received, at least we just retest the lows of this support range. And, you know, at least we're not starting from here. Because if we start from here, quite essentially, and earnings are not well received at all, we're going to drop another level, guys. And we're going right to around 210, 205, which is where I actually want to buy Apple. But all things considered, we'll take a look at the size of the bounce. And in terms of the weekly, guys, we have not lost the weekly uptrend, but it's not looking good, right? We've lost all the momentum. So if we want to recapture this, if earnings are good, it's probably going to take a long time for the bulls to reset the weekly uptrend. Just unfortunate, but then again, Apple has been having roughly flat revenue for the last 7-8 quarters in a row. For all intents and purposes, for the last few years in terms of flat revenue and flat EPS growth as well, bolstering their share price with a lot of buybacks, but buybacks can only get you so far. Eventually, Wall Street will want to see you continuously expanding your revenue and you're continuously expanding your net margins too. So we'll see what they have to say for those earnings. Moving into AMD. AMD up about 1.2% today, but the job's not done on AMD either. We know the context, guys, is clear as day. It is a monthly downtrend. It is also a weekly downtrend in terms of the technicals, clear as day. And also the daily, well, the bulls have not recaptured the daily timeframes at all. We'll have a look at that right now. So what you want to see, guys, essentially is the bounce size right now is very good, but we need to see a recapture of a daily uptrend with some sustained momentum thereafter. As of right now, this initial bounce is very good. It's a 61.8% bounce, which gives the bulls a good opportunity and a lot of space off the lows to be able to reset that into a daily uptrend. We're currently running into resistance right now, 123 up to about 134. So the bulls definitely have their work cut out for them, guys. And when we blast beyond this one, there's another resistance range up there. So it's going to be a challenging journey for the AMD bulls, but the valuation down here is very good. If we get a little bit of a retracement to the downside, I will be looking to buy the dip, probably writing short puts in the maybe, let's call it 113 down to 100 range, which is the next big area of support down there. I'll remind you guys of the AMD thesis. You either love this company or you don't like them at all. We're just looking for them to be second place to NVIDIA in the data center ramp out business. EPS and revenue are growing at very nice clips. The valuation is very cheap at a 1.07 peg right now at about $125. And we're looking for the expansion of two things. We're looking for the expansion of EPS, some of the best the company has ever had in its history, possibly ahead of it in the next few years. And the same thing for revenue, nicely expanding. We are not expecting them to beat NVIDIA, not even close. We're just looking for them to participate in the market. And all of those EPS and revenue forecasts are based on roughly between 5 to 10% market share. So we'll see what we get, but I do still like buying the dips on AMD. Got to be a little bit cautious though, because they do have earnings in about 2 weeks worth of time. So I'll be excited to hear what they have to say. Moving into Amazon right now. So Amazon was actually up 1.86% today, breaking a new all-time high. So the bulls looking fantastic on Amazon, putting in a nice rally before their earnings, which is next Thursday as well. So the context was a daily downtrend. Now we have the engulfing move and the break towards the all-time highs. So the price action and the technicals, guys, is looking fantastic. If Amazon has to take a little bit of a breather, well, just keep in mind anything above 216 looking for a daily higher low for possible further trend continuation. We might just be pulling back into the midpoint of where the range we just left off from is, about 225, 227. Confluence with the short-term moving averages as well, and just pay attention to this MACD crossover. It's looking fantastic for Amazon. Weekly bull flag now breaking to the upside, looking very good. The valuation of the company is not as bad as some folks might assume with an all-time high breakout. At 220, the peg was about 1.65, so now roughly about, let's call it 7% higher. It might be about a 1.75, but the valuation is not that bad considering that Amazon will be working very hard at improving its net margins this year, its EPS, and its free cash flow towards shareholders. So this is one of my favorite plays moving into 2025. Moving into Google also testing new all-time highs today as well, unable to really break and close above that range. We can see it's been a bit problematic for Google, but in my opinion, it is just a question of time. This is one of the first daily closes above $200. As a matter of fact, it is the only close above $200. It doesn't look the best in terms of candle structure, but it's okay. Very nice rally by Google in the last few weeks. Daily uptrend is in motion right now. And if we do choose to pull back, what are we looking for, guys? Anything above 188, looking for the daily higher low for possible further trend continuation. So Google is looking quite fantastic, if I do say so myself. Any pullbacks, in my opinion, can be a decent buying opportunity if we are looking to go for the weekly uptrend expansion beyond the $200 range into some of these analyst price targets over 2025, which are at the midpoint, right? 214 and as high as about $240. I still think there's tremendous value on Google even at these prices. In or around $200, the PEG ratio is only a very cool 1.43 with a forward price to earnings of about a 24. That is relatively cheap for a company that is still growing very well, of course. So I would be looking to maybe buy this dip back into support, which is 190 down to about 188. So if you get that pullback prior to earnings, I will be looking to participate, and I'm definitely going to participate prior to earnings and maybe even a little bit after in the event that the company drops for XYZ reason. Their earnings, of course, are in 2 weeks worth of time, not next week with the rest of big tech. They are Tuesday, the 4th of February. So any pullbacks from the other big tech names, I will maybe be looking to reposition into some Google longs. Moving into Meta right now, up about 1.14%. Very decent day for Meta overall. Nothing bad to say about the company. They tried for the all-time high breakout, couldn't get it done. That's okay, guys. Not much to say there on Meta. Daily uptrend is looking nice. If we do choose to pull back, though, we'll just be kind of trapped within this wide range that we've been stuck in, all intents and purposes, since the early portion of December. We are still looking for a higher low. Anything above 588 could just be resulting in a higher low. Tighten up this pattern and then maybe go for the breakout with earnings next Wednesday, provided that their earnings are very good. Only a few short trading days left, so they don't have that much time to tighten this up, but earnings will be a very big catalyst for Meta. I like the company, but positioning here at the all-time highs into earnings is always a risky proposition. If you ask me for my gut feeling and my best guesstimate, I do think they'll perform very well on earnings, and I would not be surprised if after earnings we see them at 650. But we know sometimes Wall Street is very funny. A company can have very beautiful earnings, but if the guidance isn't pristine, you may get a little bit of pushback. And if we do get a pushback, guys, probably heading back down here, 590, or rather 600 down to about 580, the next previous resistance and current support range for the bulls. Moving on to Microsoft. Microsoft having a fantastic day. As a matter of fact, their best day in over a year's worth of trade. One of the only 4% days of trading in Microsoft that you've been able to see since the last year and a half worth of trading. Fantastic day, and they broke the range of resistance in a very big way. The context was a daily downtrend. Now we have a new daily uptrend. You can barely see it, but the higher low is right there, guys. Daily, higher low into new daily uptrend continuation. MACD on the daily also crossing to the bull side too. And now they've created a lot of space. Anything above 426, looking for a daily higher low for further trend continuation. If we just keep pushing in one clean shot, the resistance range, I'll remind you, is right about 450, 453. And the one after that is the all-time highs. I was literally saying this yesterday, guys, right? All the major tech companies had fantastic breakouts this year to the all-time highs in a very big way. Apple did it recently. Amazon did it recently. Google also did it recently. Meta has been doing it for a lot of different times this year. NVIDIA has done it this year so far, pushing up to the big all-time highs in a big way. Microsoft did it once, very early in the month of July, and then did nothing. But for all intents and purposes, if you were to derive an average price range for the last year of trading, I would put it right about there. It really hasn't moved in the last 1 year of trading. So could this be the move, plus their earnings next Wednesday, to really act as some catalyst to really bring Microsoft back to to its former glory days of early July? Quite possibly, but as of right now, they're off to a good start. Below us, if we close this week like this, I will once again be moving this box into a green support, and we could just be looking for that weekly trend expansion that we've been patiently waiting for since Jerome Powell kind of undid the entire move leading into the end of December. Microsoft, fantastic fundamentals for the business, nothing to say there. So curious to see if this is actually their breakout phase, and I would enjoy that because you guys know I have a few positions on Microsoft and a very big leap option, which is doing quite well right now. I'll show you that at the end of the video. Moving on to Netflix. Netflix up 9.69 after their earnings, but giving a little bit back from the highs of the day, which were just around $1,000. Pre-market, we're a bit above 1,000, and open market, we just ended under 1,000 a little bit before retracing a little bit. But who can complain about 9.69% to the upside, guys? Fantastic day for Netflix. All in all, it was a daily downtrend, was clear as day. Big engulfing move, tons of space for the bulls now at this point in time. So in the event we have to pull back a little bit, well, where are we pulling back to? Well, possibly this range right there. And this box is going to be green because it is support. So let me just change that real quick, guys. My bad for not doing this prior. But you guys get to see this live and raw and all the mistakes in between. So moving into it, guys, we're probably going to be pulling back. If we do pull back a little bit more, $930 down to maybe $900 psychological could be the retest zone for Netflix. But pay attention to this MACD on the daily as well. It's been about a month and a half of just sideways and downwards momentum. So this could possibly change all of that at the same time. A little bit of a pullback, testing the higher lows, and maybe rally could be in store for the bulls. The earnings yesterday were fantastic. I hope you guys watched yesterday's video when we went over it. But all in all, very healthy weekly uptrend. We will see how they close this candle, but I'm not worried for Netflix in 2025. As a matter of fact, I think they should be having another record year for the business. Moving into NVIDIA right now. So NVIDIA up about 4.43 today. Not that bad of a day, but not breaking out of resistance just yet. Not so fast, NVIDIA. I need a break and close above 150. We have not ever had a break and close above 150. We've popped above 150 a few times, but we have not closed the candle there. So now maybe 1, 2, 3, 4, 5, 6, arguably, maybe 6 times is a charm for NVIDIA. Other than that, if we pull back from here, tons of space. Anything above 130, looking for a daily higher low to maybe 2-step this movement into the all-time highs. That is if they cannot get it done in one clean shot. So we will see, guys. I mean, resistance highs, of course, have to be the 150, 152 range. We'll see if they can get it done. If they get beaten back down into this range, well, once again, I'll be doing the same thing I've been doing on NVIDIA for the last 3-4 months, which is writing puts at the lows of the range, low 130s, high 120s. Very decent buying opportunity for NVIDIA, in my opinion. On the weekly is not looking too bad, just a very tight range of accumulation. And looking, well, this is a setup. The low, the high, the higher low, and possibly the higher high, that would be an official weekly uptrend breakout pattern and will look very good for the higher time frame, the monthly, for some continuation after the last 3-4 months of sideways action. NVIDIA is looking quite good for the breakout, but will they get it? That is the question on everybody's minds. It's very tough to predict. They're looking good, but then again, they looked great back here. They look good, but then again, they also looked very good up here. So I will only be able to confirm that, guys, when we get the breakout and close above. Then you know, okay, they've actually captured this level for good. Then we can look for the retest and then the run. That will be another very juicy trade opportunity. But NVIDIA, all in all, not looking too bad. If we do dip back down below, you guys know me, I'll be playing this area again, as I've been doing for the last 3 months of time. And now moving on to Tesla. Tesla down about 2.11 today. Not the best day for Tesla, not the worst day either, just a day of kind of sideways action. And I do expect that to maybe maintain until next Wednesday when they do have their earnings. So we know the context for Tesla right now is a nice daily uptrend, a decent amount of space, anything above 378, looking for a higher low to maybe start continuation for the rally, but it's going to be somewhat tough much before their earnings, right? Everybody's waiting for those Tesla earnings to derive. Is this price right now overvalued for this stock? Many people say yes, many people say no. It really depends. What is your view on the company? If it's a car company, if it's a robotics company, you will derive a different valuation, of course. Fair value for me, if you want my honest opinion, as a Tesla shareholder, fair value for me with future considerations for the next 3 years, not 10 years, the next 3 years, fair value for me is roughly 250. So this is expensive for me right here, and I am saying that as a Tesla shareholder, just calling it as it is. In terms of the technicals though, we have nice support below us, 410 down to about 380, not too bad. Previous all-time highs, we've been using them as a base of support, and Tesla, if we do move down a little bit further, I will be looking to write some short puts down here in the 360, 330 range, where in my opinion, the valuation is a lot more manageable, and the risk to reward proposition is a lot better than it is right here at the current time. But Tesla is really not looking bad. The bulls control this chart right now, at least in the short term, and we have not lost the weeklies. So the possibility for a new all-time high rally is still intact, provided the earnings are well received by the market. That is really going to be the catalyst to determine whether or not we're coming back down here or whether or not we're maybe moving into the new all-time highs. It is all going to be reliant on this earnings number down there. Moving into Palantir now, lastly, give me a very brief moment. No coffee the entire video. I don't know what the problem is, but I guess now we're going to take coffee sips at Palantir. So Palantir moving really nice, guys. I have to give it for the Palantir bulls. They have reacted really nicely to these dips and bought the dips aggressively. Daily downtrend has quickly now been turned into a massive engulfing move for the bulls. Looking very good. This is a 80+% retracement size right now. And in the event the bulls get a little bit tired, because we are running into resistance right around here, all the way up to about $78. If we cannot get the full V shape in motion, well, the bulls have a lot of space. Anything above 63, looking for a possible higher low for further trend continuation. So if we pull back, at least we have now breached above the lower level, which is 72 down to 70. So might be looking to form a base of support, set the higher low, and then make an attempt back into the $80 range. All in all, Palantir has held up quite well. I know some people got a bit nervous during the dip, which is completely normal. 25% in a short amount of time is enough to make anybody's stomach churn a little bit. But if you're in Palantir, guys, you have to come to expect that volatility and just focus on the larger time frames here. Who is in control? It has always been the longer term bulls. We were always looking for a higher low for further trend continuation. Nice to see that we touched the 12 EMA right there. We also curled over and cooled off the weekly time frames. Not so much cooled off the monthly time frames though. But all in all, Palantir is not looking too bad. We have recaptured the levels. Now it's up to the bulls to prove to us that they want the daily uptrend recapture to really be able to say, okay, that is the end of weekly consolidation, and we're probably not going for a weekly downtrend shift. Moving on to SOFI right now. SOFI looking very strong before its earnings. Earnings on next Monday, guys, and I will be looking to position. If SOFI dips a little bit tomorrow or maybe Friday, I might be going for a cheeky earnings long gamble, just basing it off the fact that all of the financial companies so far that have reported have all been very well received by the market. I would not be surprised if a lot of this movement right here is off the back of those bank earnings. You know, SOFI is up a lot in the last few days, right? 31%. It doesn't look like it, but this is a very, very big move for the company. So is all the earnings bullishness already priced in? Well, that's what we get to see on Monday, depending on how much they surprise us. So the daily downtrend was quickly converted into a nice engulfing move, looking for a higher low for a trend continuation pattern, guys. This is the good old breakout, retest, and possibly run. It was always a nice weekly, kind of a bull flag here on the weekly, right? So we will see if the bulls are really able to get that breakout retest in motion. That will be a very healthy trade attempt, in my opinion. So just going to be watching for that retest, but all in all, looking very, very healthy for that breakout and possible continuation. The next targets, for all intents and purposes, has to be the $20 psychological. So that is everything for our stock market recap, guys. Now let's review some of the trades that we made today. And a lot of the trades made today, guys, no new opening positions, but we did take some very juicy profits on a couple of different trades. So let me show you those now. So before I show you the portfolio, I may as well show you some of the trades that we did close today. So you remember I had an NVIDIA short put that we took a few short weeks ago at the 140 strike for $6.12. Happy to say that with today's rally, we got out of those, closed them for $2.75. So we pocket about 55% profit with 3.5 weeks remaining on the contract. The logic behind closing was very simple, guys. Big tech earnings next week could be very volatile for the markets. So rather than riding this, I'm just freeing up some buying power for some potential big tech plays. And in the event NVIDIA pulls back towards the, towards the 140 level again, and I can get a better strike because I had the 140 strike, which is really my attempt back here. When we were here, guys, I was making an attempt on this big candle that we were maybe going for consolidation and breakout. So I wrote the 140s with a lot of time time. And unfortunately, they kind of unraveled, right? But now, if NVIDIA gets rejected here and we find some discounts in the next few days leading into tech earnings, I'll be writing for some better premium at a lower strike. So that is the logic behind closing the NVIDIA trade. And we also closed one trade that we had on Microsoft. So you may remember I had some Microsoft call debit spreads. We bought these a while ago. We actually bought these way long ago, guys. October 11th was the entry for those. We closed some periodically, but you may remember I left one runner over the course of the last few months, and suffice to say, we are now out of that position entirely. We closed this last contract here for 309, the last one 56% ROI. Been a very profitable trade on those 5 contracts. We've sold the highs every single time almost, so we're now out of that one. I still have some for March, and we'll take a look at that. We'll take a look at those in just a few short moments. And the last ones, of course, have to be the lottery trade. So the earnings trades. You may remember I had the UAL short puts for a bit of an earnings trade. We got them for 21 cents yesterday, closed for a penny, so 99% profit. The Netflix trade overall, the combo trade, the short iron condor, and the long call debit spread, they were also both closed at a net profit between the two. The condor, a very tiny loss, guys. You might remember that on Netflix, I had an iron condor, which basically means I had call credit spreads up here and put credit spreads down there. That's all it really means. Fancy word for saying a combination of 2 spreads. That being said, the higher end of the range was about 10.15 to 10.20, and now it's a little bit too close for comfort. So I said, you know what? Rather than waiting till Friday and taking a chance on a Netflix staying below that level, I'd rather just close the trade profitably overall. So we closed it very early in the early morning. So you can see here the condor was closed at 45 cents. We got into it at about 37 cents. So you took an $8 loss on the condor. Big deal, right? And then the call debit spread was actually a very nice win of about $136. We got into it at roughly 220, and we got out of it about 361. So very healthy gain there on this Netflix position. Not a very large earnings trade, but a successful earning trades nevertheless. And Johnson & Johnson, we closed it for a small loss. It came down into our assignment level. I had the 143 strike. We got it for 37 cents. I closed it for 85. If I would have kept it the entire rest of the day, guys, we would have made profit on this one, but I'm just not in the business of wanting to take this one as a wheel trade. It's an earnings trade. And usually with all my earnings trades, I close them the very next day. Whatever happens with the stock, we're not into it for a wheel trade, or I would play it a little bit differently. But this was an earnings trade and we took a little bit of a loss. So all in all, guys, not that bad for the earnings plays, right? Little loss here on Johnson & Johnson, overall win on Netflix, and overall win on United Airlines. All in all, a successful day for earnings and a successful day of locking in some profits on the call debit spreads and a successful day of locking in some profits on this long dated NVIDIA wheel. So all in all, over $500 in realized profits today, guys. I can't complain about that at all. Now let's take a look at a few of the positions I have remaining and then we're done. So in terms of the account here on the YouTube portfolio, keep in mind, guys, this is a portfolio that I started about 2 years ago when we started the channel with about $100,000. And now we have reduced it to $50,000 to start off the new year. I wanted to make the account size a little bit more relatable to the average person out there and show you that we can implement some small, medium, and even large size account strategies with this balance. So there's something for everybody. My goal is to show you guys the most amount of trade ideas in terms of call debit spreads, put credit spreads, leap call contracts as well. And that is the purpose of this portfolio. So we will see how far we started off the year with roughly 47,000, just under 50K. I brought it down from about 94K, which was the closing balance of last year. And then we brought it down to 50K or 47K. And we're up fairly decent on the year so far. We're like roughly about 9 something percent, just under 9 here on the graph. So we'll see. Not a bad start to the year for the month of January, say the least. And we have a ton of buying power, which is exactly how I want to be positioned leading into the big tech earnings. If I can get some juicy opportunities on some dips, I am well ready to buy them. Other than that, guys, you'll see the portfolio, no new changes at all. We are still maintaining the Apple short put here, 222.5, the wheel trade. It is now almost break even, but still at a little bit of a loss. One little push to the upside on Apple. We'll probably be able to close these contracts for a gain. Other than that, the other wheel trades we have for the week is BITX. Those are moving nicely. We got into them for 30 cents. They're only worth 10 now. The Elf Beauty puts as well. We got into them last week for 64. They are still a little bit underwater. But if ELF closes below 115 and I have to buy the shares, guys, I really don't mind. I've been saying I wanted to buy them down here for the last few weeks, and if I get a sign, no problem at all. I will run the wheel strategy on them. Other than that, you can see I still have one remaining contract here for the Microsoft call debit spreads for March, so I'm going to keep these through earnings. They're up nicely right now. Other than that, we also have one new, or not new, but one still remaining wheel trade is the Teslas, 222.7 short puts. Now we got them for 15 cents and they're all but worthless. So not that many wheel trades left in the account today. There wasn't many new opportunities that really caught my eye today. So I just held my buying power, closed some very nice gains, freed up more buying power for any new plays because I am maybe expecting for the SPY and the QQQ to have a little bit of a retracement. And if we do get that retracement, guys, I have tons of money to start buying those short-term dips on whatever may catch my eye. So that is pretty much everything for the portfolio recap. Most of the positions are moving nicely, nothing to really complain about at all. And we also do have another set of portfolio positions, which I told you guys I would show. My bad for not showing them, but this screenshot was taken today, as you can see. And after the Microsoft and NVIDIA rallies, I mean, these calls have been up for the last few weeks, but overall, here you go. Here are the gains on the other call options. We still have one Uber call option, a leap contract, all for June of 2026. So Uber up nicely, 30% unrealized gains. NVIDIA, we have the 121s for June 2026. They're also up about 11%. So not the biggest gain, but still in the green. And the Microsofts as well have started lifting off. We are up about 13% on those. So all in all, some decent performance on some of our remaining leaps. I'm very happy with the portfolio performance overall, especially leading into this new year. I think our price that we got these leaps at is very good, very attractive. And I think it leaves a lot of room to the upside if 2025 is a good year. And I have so much time on those contracts, guys. That's why I put so much time on them. I can move through the volatility and I just don't care because I have a lot of time on the contracts and I am fairly confident in the levels at which I got those contracts at. That's going to be it for today's video, guys. Hopefully you enjoyed it. That's the last portfolio recap before the Friday session. Tomorrow, we'll probably take a look at more momentum stocks and other stocks that I don't talk about that often. But that's it for today's video. Hopefully you enjoyed it. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to hit 5,000 subscribers, guys, over the course of this week. We are only like 15, 20 subscribers away. So if you can help me get to that big milestone, I would really appreciate it. And lastly, if you have any questions whatsoever, guys, feel free to ask them down below in the comments and I will gladly answer you within the first 1 or 2 days. And lastly, if you are interested in the private Discord, the private trading group that I host, the link is always down below in the description. You will obviously get all the access to the live trades. These are all the trades that I've made since the inception of the Discord. The green check marks are the wins. The little red dots are the losses. These are all the trades since the inception of the Discord, always very transparent with you guys overall. And these are all different types of trades, the wheel trades, right? The put credit spreads, the call debit spreads, the leap contracts, the share swing trades, the long-term portfolio positions as well. All of that is included in the Discord service. We also do private videos every Monday through Friday, the live streams Monday through Friday for about 2 hours after the market open. In terms of duration, you can also ask me all of your questions all throughout the day in our chat rooms, and I'll be glad to answer you in terms of stocks or options or whatever you like. And thereafter, guys, as well, in terms of a number of different other things that I don't often talk about, you get access though to all of my watch lists, all the watch lists, and also all the chart layouts and technical analysis that I've done. All the boxes and everything like that, the support, the resistance zones, all the annotations for corporate earnings, and I have a number of them, you guys know that, and tons of other things, guys, in the Discord. So if that's something that interests you, the link is always down below. Hopefully I see you in there soon if it does interest you. And if not, I guess I'll see you back on the channel, guys. So that does it for me today. Take care. Have a great rest of your evening, and I will see you tomorrow after the close. Peace.